Hello, I have delivered various formats of my presentation regarding this project, one of which is video lectures or in a video format. This is first module of a video lectures starting with the introduction of management accounting. As Dr. Manoj Shah is delivering lectures for the management accounting, they start with the first chapter. The topics to be covered under this first module, these are introduction part of management accounting, definition, relationship of management accounting with cost accounting and financial accounting, role of management accounting, nature of management accounting, scope, tools and techniques, difference between management accounting, cost accounting and financial accounting, functions, limitations and many more. Here they start with this chapter with the introduction of management accounting. Management accounting is all about identifying, measuring, communicating economic information to permit informed judgment and decisions by users of information. So the information has to be gathered properly, then they communicate properly and permit this information for taking a future judgment for decision. In this regard, the management accounting system consists three parts: financial accounting, cost accounting and management accounting itself. So these three systems, or you can say three accounting methods, are interrelated. And why it is interrelated? Because of the financial accounting, it's a basic accounting, cost accounting, which are actually required before you are starting any business, or maybe if you are start a business, then you need to identify what is your cost of product and services, and then management accounting to identify and providing the best resources at a reasonable rate to earn a good profit and provide a good quality of product. Accounting information specifically prepared to aid managers is called management accounting information. This information is used in three managerial functions: one, planning; second, implementation; and then control. That means the planning is systematically, then if you implement it properly and control, then the management informations would be absolutely perfectly used for a future path of action. Achievement of this objective is becoming difficult, mainly due to a globalization, cutthroat competition, specialization, rapid technological advancement, e-commerce and increasing a social responsibility. Here it has therefore become a compiling factor for management of every business enterprise to keep in touch with the latest information related to its internal and external environment. It means that the management accounting is purely depends on internal and external environment. If everything runs systematically and properly, then all information has to be supplied to managers or management systematically, which is called management accounting. As per financial accounting and cost accounting, the management accounting is not a separate branch of accounting, rather it is a simple technique. So that means the financial accounting and cost accounting are actually a branch of accounting, but management accounting is a technique. Why it is a technique? Because of the management accounting is all about the manager properly a system of accounts, and ultimately it helps to take a future decision. So that means the management accounting is improvisation of your decision effectively and efficiently. It is providing both financial and non-financial information. Management information is pervasive and purposeful. It is intended to meet specific decision making needs at all levels of organization. That means from bottom to top in all the different departments and at all the levels, management accounting needs help. So managers are supposed to be gathering an information from all different levels for taking a future path of action. Management accounting also produces measures of the economic performance of decentralized operating units such as business units, divisions and departments. These measures help senior managers assess performance of the company's decentralized units. Management accounting information is a key source of information for decision making, improvement and control in organization. So ultimately, if you have some information, that information has to be optimum utilized for taking a decision, and that is why you need to improvise and control of your whole system. Management accounting is concerned with data collection from internal and external sources. That's first. Analyzing systematically, because of if you analyze properly, then you would be actually reaching your target or your goal. Process properly, then interpreted in such a way where the amount of data has been communicated properly to each and every particular stakeholders who are involved to take a decision. So that means the information for use effectively, this particular sequence has been useful. The accounting statement and reports in managers accounting are situation specific. It's very clear. Always it is in situation specific, and that is managerial accounting reports attempt to fulfill the information needs of managers with respect to a specific problem, situation or decision. Management accounting is not confined to the area of a product costing, cost and price data. The objective is to have a data pool which will include any and all information that management may need. Ultimately, this is a part of introduction of management accounting. Now we would be moving the next step, that is definition of management accounting. Management accounting definition, it is generally referred to as accounting for managers. So in the simple words, if you want to say, it is accounting for managers, right? The system has designed to provide adequate and appropriate information details to the management in order to carry out its functions. Any form, here this definition is very important, any form of accounting which enables a business to be conducted more efficiently, which is called management accounting. Another definition is given by Robert Anthony, that is, management accounting is concerned with accounting information that is useful to management. It says very clearly, if it is any information regarding the management concern, it would be helpful for management accounting. Another definition is given by one of the author, that is, management accounting is accounting for effective management. Here I am going to take another definition which is given by one of the institute, that is ICAI. Such of its techniques and procedures by which accounting mainly seek to aid the management collectively have come to be known as management accounting. So it means that this is a technique, it's a procedure. For what? It is for just required of any further information would be adding for management collectively some part of decision, which is management accounting. So this is a definition for management accounting, more effectively and efficient accurately. Here I am taking one more, that is, management accounting is an integral part of management concerned with defining, presenting, interpreting information like formulation strategy, planning and controlling activities, decision taking, optimizing the use of resources, disclosure to the shareholders and other external to the entity, disclosure to employee, and the regulating assets. This is what all about a definition of management accounting. Here I am going to move the next topic, that is relation of management accounting to cost accounting and financial accounting. Before I move to this point, I want to tell you here, all the three branches of accounting have some internal connections. Fine, I was already mentioned earlier, management accounting is a technique, but I want to tell you it is a part of a branch of accounting also. There are three types of accounting, as financial accounting mentioned earlier, cost accounting, and then the third is management accounting. What is financial accounting? Financial accounting is all about try to identify the transaction first. Then that transaction is identified whether it is an economic or not. So transactions, then find out the economic transactions. If it is an economic transaction, then it should be recorded properly in the systematic books. Then find out the ledgering, that means posting. Then after you post a transaction into respected accounts, then find out the balance of that account and write down that particular balance and find out the trial balance. And from the trial balance at the end, you are prepared a financial statement. Which financial statement would be helpful for managers? In financial statements, generally you are prepared a manufacturing account, trading account, profit and loss account, and balance it. Now what is cost accounting? It is a little advanced than the financial accounting, which are include detailed cost information, services, cost centers. That means the identification of the cost information, that's fine, but then you need to identify under which cost center this particular cost would be recorded, whether it is in factory expenses, administrative expenses, selling and distribution expenses, or it is a prime cost base. That means a part of a production expenses. So that means the cost centers is important. Then cost diversification. Sometimes the expenses are incurred in general. So we need to identify whether it is an expenses for this particular division or other division. And according to that, we identified the cost expenses. And then now about all information is used by management for planning, organizing, controlling, and decision making for management concern. So now we would be moving to the next point, that is role of management accounting. This is a key input, provides valuable services to organization in all the functions areas. Here, with the help of various functional take effective decision, the first point is planning. So the role of management accounting is very important. How it would be very important? Because of ultimately it's based on financial accounting and cost accounting. So if you identify the certain things, then you need to plan properly. So here we are starting with the planning first. It involves deciding the future course of action based on the current status of the given resources. There are many resources, plenty of resources to get an information, gathering the informations. But if you are not planned properly how to utilize these informations, how these informations would be affected to the particular decision, then it might be not taking a right and proper decision. Planning is a broader way, like a formulation of policies, setting up goals and objectives, decide a sequence of activities. It provides valuable information and data for analyzing the problem and taking the accurate decision. So as I already mentioned that you need to identify the goals, your objectives, then analyze the data properly. Why you analyze the data? Because of your goal is already decided, your objectives is also identified. So then you analyze your problem and then you just move in that direction to take an accurate decisions. So according to me, information is the important factor required to plan. Then the second point is organizing. Planning is done. Now we move to organizing. It is a process of establishing an organizational structure and assigning a responsibility to people working in an organization for achieving the business goals and objectives. So now organizing in which way? I need to identify the person who are supposed to take a responsibility, who is going to helping out to achieve this particular objectives and targets and goals. So identified the people, and then according to the identification, then understood the problems and then let them inform. Start with that. It involves grouping of activities in such a way that they operate in a coordinated way. That means I'm actually try to identify the things, then make a group, and they will try to sort out this issue in group or maybe as a teamwork. And it contributes hereby creating a various centers which carry various tasks to be performed in order to obtain the predetermined objectives. Why predetermined? Because of the objectives is already designed earlier. So we already have an objectives in our mind before we are actually move on the particular task or on a particular goal. So that is why in that direction we start to move it. In this process, setting up divisions, departments, sections and branches. So we identify different sections, branches, departments, and then we move further. It requires clarity about each manager's responsibility and lines of authority. So ultimately the organizing in such a way. Now next point is coordinating. Techniques of management accounting helps in coordinating various business activities. Fine, if you are not coordinated properly, then your task may be collapsed. So it should be interlinked edges between all the departments to achieve common goals of the organization. It is highly requirements of liaison between departments is to allot them respective budget which are interconnected. For an example, management accounting is used in designing budgets for an efficient allocation to each department and coordination to the particular courses or centers. The next point is controlling. It is a systematic appraisal of actual results to ensure that there is no deviation between planned performance and actual performance. So it means I need to control in such a way what I was planned and which way I moved. So my planned performance and my actual performance should not be waived, and that's why I need to control that both the things are actually run properly. It has to compare actual performance with operating plans and standards and to report and interpret the results of operations to all levels of management and the owners of the business. The techniques such as budgetary control, so that now the many techniques are there for controlling all this, like a budgetary control, standard costing, department operating statements and many more. As a matter of fact, an entire system of controlling is designed and operated by the management and that their practices. It plays a vital role in controlling our decisions. Pointers: motivating. It means channelizing strong motives or urge of an individual into action so as to obtain goal-directed behavior. Motivation is the biggest role played in your organization. If the management have a systematic motivational plan, the people can find out a best way of resources to execute their steps and converted into their goal. It involves maintenance of a high degree of morale in the organization. The managers and supervisor must know whom to motivate, what extent to motivate, which tools to be used to motivate. According to me, big question can only be answered if the decision authority has certain reports to find out the functionality of resources. Next point is communicating. It involves transmission of ideas. Ultimately, it's a communication. We need to transmit the ideas, symbols. Sometimes the ideas has to be symbolized. Facts. Listen, whenever you want to reach a systematic and reasonable objective, you need not to hide any facts. Whatever the facts available in your hands has to be passed out to the person who is trying to involve in the system. Information from one person to another through a proper channel. So that means the channel should not be break. Whoever is actually in the particular system, this amount